There's a catastrophe coming, and not only am I about to show you the details of it, but make sure you stick around to the end of the video because I'm going to show you a simple solution to avoid being sucked in by it. Stay tuned. What's going on, my YouTube friends? This is Jerry Abbott, your #1 real estate resource here in Las Vegas. Hey guys, before we dive into the video, a couple of quick things. If this is your first time on the channel and you want to learn the cold hard facts about the Las Vegas real estate market and real estate in general, definitely subscribe to the channel down below. Number 2, make sure to give me a thumbs up like, guys. It would really help the channel out. And number 3, if you guys are thinking about relocating at some point to beautiful Las Vegas, whether it's next month or next year, I've got your back. I'm a local real estate agent here. I've lived here for nearly 20 years. I know every inch of this city. Just call, text, or email me anytime, and I'll help you find that perfect dream home. Let's dive into the video. Okay, so here's the reality as to what's going on in the economy and the overall housing market. I want you guys to take a look at a few graphics here on screen, especially this first one. This is pretty stunning. 50% of Americans have less than $500 in savings. Job layoffs now are happening across the board. Interest rates are crushing people's dreams of home ownership. And those that do own homes, look at this. Nearly 40% of Americans have actually skipped meals to make house payments. Now, does any of this sound remotely normal? It isn't. And this is just the beginning. Wait till you see the following segments coming up. All right, let's first take a look at this video segment that came out from ABC News last week about yet again another potential banking crisis situation. This talks more about the macro view of the overall economy and the problems that we're potentially facing in the banking situation that can trickle down into the housing market as well. So let's first take a look at this, and then I'm going to comment on it after.
And First Republic Bank shares are down more than 20%, and deposits have plunged after the March banking crisis, which triggered panic across the banking system. But First Republic says it could have been a lot worse. ABC News business reporter Alexis Christophorus has more on that and your other business headlines. Alexis, what are you watching today?
Well, Diane, customers pulled their money out of First Republic Bank in droves last month after the collapse of Silicon Valley and Signature banks triggered panic across the banking system. So customers withdrew $72 billion in deposits from the San Francisco-based regional lender. But First Republic says that number could have been a lot higher if not for 11 of the nation's largest banks coming to its rescue. First Republic says deposit withdrawals have since stabilized, but some analysts say the future of the bank is uncertain. First Republic says it is looking for ways to raise cash and plans to reduce its workforce by up to 25% this spring. By the way, that stock is now down more than 90% so far this year.
All right, so there's a reason why I wanted you to take a look at that first video segment, because even though it doesn't speak specifically to the housing market, it's more of a macro view of the overall economy. When we keep running into these banking crisis issues that are now popping up, there's a loss in consumer confidence. People start pulling money out of the bank and consumer confidence drops. And when it drops, that means demand usually drops with large purchases like houses and cars. So I think the more we keep seeing banking crisis issues like this pop up, that the economy is really kind of a house of cards. And when consumer confidence has been lost, a lot of people are going to start to pull back on big purchases like homes and cars, and ultimately demand is going to drop. And that's why I think home prices are going to continue to recede further as we go through this year. Okay, so I want you to now watch 2 short video segments that perfectly illustrate the elephant in the room that just happened through the Biden administration. Basically what happened was the Biden administration is now making it easier for people with poor credit and low incomes to get into homes and be subsidized by people who are good borrowers with higher FICO scores and higher incomes. Take a look at some of these details, and then I'm going to come back and comment on it right after.
The Biden administration just made it easier for people with bad credit to buy a house. Discounted mortgage rates will be offered to home buyers with riskier credit backgrounds. Buyers with credit scores of 679 or lower will have their fees slashed, resulting in a 0.5% discount on their mortgage rate. And the way that the U.S. government is paying for this is by actually charging people with good credit more for their mortgage, with high credit buyers who place 15 to 20% down on their house experiencing the biggest increase in fees. The U.S. government is now penalizing people with good credit credit and who put a high down payment so they can expand housing access for lower income individuals with low credit. And that's exactly what the US government did in the early 2000s, everyone. They tried to pile as many low income borrowers into the housing market as possible back then, and most of them ended up getting foreclosed on. And unfortunately, I think a similar situation could end up playing out over the next couple of years. This low income buyers are already stretched on their ability to make payments. Their debt to income ratio is the highest level it's ever been in 2022 and 2023. So get ready for a lot of mortgage defaults and foreclosures over the next 2 years.
Home buyers will be facing a pretty costly surprise come May 1st. A new federal rule will affect those with good credit scores, making them pay more to subsidize people with riskier credit scores. It's part of a push by the Federal Housing Finance Agency to try to make homes more affordable by reducing the rates for those riskier borrowers. Tom Blanchard with the Nevada Association of Realtors weighs in, saying it's unfair to those that do have a good credit.
They're incentivizing those with bad credit, which can lead us into having the same kind of problem that we had back in 2008 when we were giving credit to anybody. And with that, I think is rather dangerous.
All right, so after watching those two video clips, I think it's pretty clear that if you connect the dots here, this is a catastrophe in the making regarding the overall housing market. This is exactly what happened back in the early 2000s. There was a lot of foreclosures because a lot of people could not afford home payments back then, and it cratered the market. I think this time around, although it may not be as bad, if a lot of people end up getting into homes and they can't afford to make payments, this is going to potentially topple the overall real estate market in the next year or two. All right, so let's take a look at this article that just came out last week from Business Insider. You can see the headline here saying the housing market downturn will send home prices 5% lower and help push the economy into a recession. So if we scroll down here and take a look at a couple of these bullet points, they're talking about a 5% year-over-year decline in the second half of 2023. And in the third bullet point here, it says the housing downturn is part of the reason why we view a mild U.S. recession in 2023 as most likely. Now, guys, here's the thing. They are being polite, in my opinion, with a 5% downturn. I think we're going to see at least 10% based on the economic data that's going to come out. Again, like I said in last week's video, we might have a debt ceiling issue. We may have higher interest rates coming. I think 5% is conservative. But again, I'm not the only one saying that. These are major hedge fund companies and Wall Street people that are predicting this kind of a downturn. So again, that's why even though I sound a little bit like a broken record, being patient right now is the prudent play, because I think as we go through this year, especially the second half of this year, I think there's definitely going to see more housing prices recede throughout the entire U.S., especially here in Las Vegas. All right, so let's drill down specifically into my neck of the woods here in Las Vegas. I'm on the popular website that a lot of people are familiar with Zillow. I want you to first take a look here. We're going to start in the high end in the luxury space, and then we're going to work our way down just to show you some of the price reductions that are continuing to happen here in Las Vegas. So you can see right here, the price of this home is $2.25 million, but they just had a price cut of $150,000. So this home was listed at $2.4 million. Now the Zestimate, this is how Zillow estimates the current market value. They have it estimated at $2.1 million. So again, this is still high for where the current market value is on the Zestimate. But if we scroll down here and take a look here in the history of this listing, just take a look right here. In June of 2022, almost a year ago, this home value was $2.8 million. So again, this is about a 20% reduction from where it's currently valued right here at $2.1 million. In fact, if we scroll down here and take a look at the price history, you can see right here, almost a year ago in June, they had it listed at almost 2.8 and they had no takers. Take a look at all these price reductions until we get here to the current price at $2.25 million. So even here in the luxury space, there's a lot of price reductions. There are not buyers at this level because they're waiting still for prices to come down. And again, I think sellers are going to have to capitulate based on economic data that's coming out, and they're going to continue to reduce prices from the top end here all the way down to the low end. All right, so let's take a look at this second example. Now we're definitely coming down in price. This home you can see listed on Zillow is $725,000, but right underneath it you can see a price cut in early April of $100,000. So they had this listed at $825,000. But take a look down here on the bottom right where I have this highlighted in gray. July of last year, they listed this home for just over $1 million. And then you can see all of these price reductions going all the way through until the present time here where they have it listed at $725,000. So again, The home was listed at over $1 million last summer. So if you wanted to buy this home last summer, somebody was going to buy it probably for close to $1 million, and nobody did. Had you just waited, as I've been advocating, take a look at this reduction. You're talking about a 25 to probably close to 30% or more reduction before this home actually gets sold. So again, it just goes to show you that being patient over the last year, you would have gotten a much better price right now as if you had bought it from last year at this time. All right, so let's take a look at one final example here in Las Vegas that's closer down to the average price point, still a little bit above it, but this home is listed for $485,000. But right underneath it, you could see a price cut of $90,000 that happened all the way back at around Valentine's Day. In fact, if you take a look at the bottom right here, this home was listed for $575,000. Around the end of March, they had a pending sale at $485,000, and obviously that fell through because they relisted it at the end of April for $485,000. So again, from $575,000 down to $485,000, that's about a 15% price drop since that time period. Again, this is not happening on every home, but there are deals out there where you can see a lot of homes here in Las Vegas where there's a lot of price reductions between that 10 and 20% mark, and sometimes even more. So again, because of the economic uncertainty and peak prices that hit last year, I still think we've got probably another 10, maybe even 20% to go on this price correction in the overall housing market, especially here in Las Vegas, based on what's coming out for economic data. So here's my summary on all of that data. Number one, none of this seems to make any sense. Number two, none of it seems remotely fair. And number three, none of it seems to be getting better anytime soon. I think the economy and the housing market in particular are definitely in for some turbulent times as we go through the rest of this year. So the simple solution that I had mentioned at the beginning of the video is this: if you can tighten your belt and be patient and ride this storm out, that really might be your best bet. So before we end today's video, I just want to give a shout out to my favorite comment from last week's video, and that goes to Terry. You can see her comment here on screen. She thinks that home prices are still way overpriced and isn't planning to buy until 2025 or 2026. I have to admit, real estate down cycles usually take a few years to bottom out. So this really might not be a bad play for a lot of people that are trying to wait for the bottoming of prices. And if you're new to the channel, just remember to leave a cool or creative comment down below. And of course, like the video as well. And my favorite comment that I picked from the video, I'm going to give a direct shout out to in next week's video. So I hope you guys enjoyed today's video. I also hope you appreciate my transparency. Like I've said before, I'm always going to keep this channel 100% real regarding the overall real estate market, with specific emphasis here in Las Vegas. So if you found this information helpful, definitely subscribe to the channel down below and make sure to give me a thumbs up like, guys. And with that said, I think being patient right now in this real estate market is your best bet. Definitely sit on the sidelines. I think better prices are coming later this year and into 2024. And if you're thinking about relocating to beautiful Las Vegas, I've got your back. I'm a local real estate agent here. I've lived here for nearly 20 years. I know every inch of this city. When the time is right for you guys, definitely call, text, or email me, and I'll be happy to help you find that perfect dream home. I'll see you guys in the next video.